All right, so since I'm seeing one, if one can hear, then it means that everyone can hear. And tonight's call is a call that's different from the others, different in light of it's not a call where everybody is on from the regular team. Selected persons have been asked to be on this call. So I really appreciate your response in accepting the invitation to come on this call. And firstly, I must say that thinking about it, it's few things that can unite people together. And one of the things that really can unite persons is when people have the same objective and the same goal. And we're all here. It's not the first time we've had calls. We've had many calls. And I can see the unity and the togetherness because we all understand what our goal is and the directions we want to go. Then it led me to think that here's what, why do we have so much problems on work and school and other things? It is because we all aren't sharing that same common goal. So it tells me that a lot more time has to be spent in giving directions in our everyday life. If we want to cooperate and we want to achieve and we want to work together, persons must understand what the common goal is. And once we understand what the common goal is and we make this common goal our goal, I believe we're going to have a lot more unity because we are here together so we can learn together. And even in learning together, we can learn from each other. This is a system here where no one person knows it all, but it's all about learning from experience. And again, experience doesn't come by years of doing something, but experience comes from experience. I want to explain this because you may be doing something for 10 years, 15 years, and you may not be doing it the correct way. And you have 15 years of experience doing something the wrong way. And somebody comes and they have 1 day or 2 days of experience and they're much better off than you because they actually have experience. So too many times we fool ourselves believing because we have been in it for so long, whatever it is in life, we have experience and this is what it is. But again, humility is the key to anything that we do. So many of you here on the call have just learned about trading, some just a few hours, some just a few months, a few weeks there. And I can say that of all the persons who have been here, I have been trading since about 2005, thereabout. So I have a lot of experience, a lot of trading errors, and always try to correct it. But I've learned a lot more than I did in all those years, just in the last 6 months. And there are others who are on this call who just started recently, and because of the experience, again, they would have learned a lot, even more than I do. But I must tell you that the key to surviving on this is perseverance. We are going to be disappointed at times, but we should not give up. And I am where I am today because I persevered, but not the way I should have, because I was self-taught initially. There was nothing like I am when I started, so I did some reading, YouTube videos, and so YouTube is helpful to a point, but again, what can happen with YouTube, many times the follow-up, the sequence in which things are done may not be adequate for us for our development. So from time to time, it can help to seal some of the concepts there, but again, we learn a lot more from each other. We learn a lot from the others. So tonight's session really is actually a practical session. Because at the end of the day, things are made complex. You listen to some medical terms and only people in the medical field might be able to pronounce some of the words. And really and truly, they mean little things. But some persons use those big words to make them feel that they're educated. And some persons use some complex terms to get other persons to look at them, okay, this man is an educated man, or that's an educated woman. You hear the kind of things that she's saying or whatever. And half the time is a whole load of crap that they're saying. And even when it comes to trading, we see so much things and you believe, well, here's what, I can't do these things. It looks so complex and so complicated. And we would be there here, or this is not for me. It is designed sometimes to scare persons. And even looking at some of the educators from IM and some of the strategies they teach, it is solid, it is sound, but if you missed some of the elements, you can miss the entire thing. But nothing is as good as simple. The simpler things are, the better it is. So some persons look at people's chat and you look at something and it's so much lines and so much things, and then you say, here's what, my brain too old for that. I think I'm going to give up. But we're here tonight on this platform. We're here to let you know that we are in this thing together. We are going to work together. And believe it or not, trading is not as complicated as persons may want it to be. At the end of the day, all of the tools, all of the signals, all of those things here, they can help, and they help a great way. But it boils down still to one basic strategy. So you have a car and you can have what model, what year, whatever. It boils down to one thing. You push your key in the ignition or whatever, keyless entry, you start the engine, you have the steering wheel, you control with your hand and your foot with the pedals, and you stay on your side and you drive. It doesn't matter what vehicle, that's the basic principle. So you may sit up, you may sit down, you may have a folded seat, a recliner, whatever it is, all boils down to one basic principle. Steering wheel to go left or right, pedals to go, to stop, to change gear if it's a manual vehicle. And tonight we're going to erode a lot of those things there. We're going to show you simply what strategy and what trading is all about. We're going to make this call a regular call. There are those on this who might have just started and not quite aware as to how things are done when it comes to trading. There are others who have been trying various strategies and looking at various tutors. But at the end of the day, it comes down to simplicity. And trading follows one principle. It follows you buy or sell, the market goes up, the market goes down, the market consolidates. That's what it is. Consolidates up, down. That's what it is. Everything is mathematically calculated. And this principle can be seen throughout. So tonight, yes, and when it comes to trading again, routine and going over and over at times is what does the work. So repetition, repetition, repetition until you quite understand it. Some persons may explain something a particular way and you don't quite fully get it, and another person explains the same thing and just the way that they did it would bring more sense and understanding to you. So tonight we're going to be looking at the main strategy. When I say main, it's not, if you look it up, you wouldn't see it as a main strategy, but I'm saying the foundation of trading and trading the market. It's all about working with trends. So I'm going to share my screen. I'm going to share my screen. I'm going to explain something here that we're doing, and then I'm going to turn over some of the time to Kendall, and then I'm going to come back after, and we're going to focus on what we're doing here. All right, I'm seeing we have 23 persons on this call. So for those of you who are new, those of you who are just joining in, this screen that you're seeing here, let's see if I can move that out of the way. Okay. Now I want to hide. Let's just move this to the bottom. Good. This screen that you're seeing here is what is my trading view. So a lot of persons get onto the trading view. And what TradingView does, so tradingview.com, this is the site that quite a lot of the educators, quite a lot of persons use, because on this site here, we can do a lot of markup in terms of doing all the analysis that we have to do in the market even before we place our trades. There are some brokers that you can actually connect your TradingView account to, so you can actually place your trade here. So for those of you who are new, you should sign up for an account on tradingview.com. It is free, tradingview.com, to sign up for an account on tradingview.com. And what it does, one of the advantages of having a TradingView account, apart from being able to mark up your charts, here you can also mark your currency pairs, like you can see on the side here, where I have some of them color coded. Where it is color coded, you can mark it on the side here. But also you can set alerts and you can do a lot of things in there. So even if you download the even if you sign up for a TradingView account, you can always go to YouTube and just do a tutorial on actually how to use TradingView. I know coming from one of the other sessions previously that was done with Tyrone and Wallace, they did a full walkthrough as to how to use the TradingView app. So this is not the focus tonight. The focus tonight is on really learning how we can place a trade and understanding the market. So again, the market moves up, which is done by our green candles, which we know. The market moves down, the red signifies this, and then there are times we have consolidation. This is just how the market moves. So in spite of what tools is used to predict or whatever, the basic principle of the market is up, down, sideways, which we call consolidation. What we have to learn really is how to know when the market moves in what direction, when the market changes direction. Again, after this session tonight, I'm hoping that we would be in a position where we can be more confident in the trades that we place and learning how we can actually stay in trades. Because like every one of us, nobody likes to lose. And sometimes when we see we lose or we start losing, we tend to jump out of trades. And the strange thing about it, the minute time we jump out of the trade, this is when the trade goes in the favor that we would have already. If we are buying, as soon as we get out of the trade, it goes in that direction. It seems as though the market sometimes is out for us. It happens at times. So if we learn how to analyze the market, how to do our trends and how to see what's going on, it tells us here's what. I have the confidence that the trade, even though I'm in negative, even though I'm not in the color that I like to see, eventually I can still stay in the trade because I know it is going to go in the direction in which I want to get it to go. So tonight's session is really about drawing trend lines, understanding the market is all about trend. It's uptrend, downtrend all the time. Even in our uptrend, you may have some uptrend that's going on in a downtrend market. By this I mean, and normally we call this a pullback. So if the market is in a downward movement, and we have some uptrends in between, we call that a pullback. If it is an upward movement and then we have some little downward trends in and between, we call those pullbacks. And many times, sometimes we get into a trade and we get into the trade on the pullback and we get into the trade a little before time. Or sometimes again, we get into a trade after, because there are times we get desperate. And here's what, the foundation of trading, the best trade is no trade at all, which is being said over and over. If you don't trade, you don't lose your money. All right, just 1 second. Let me just take the call. As a matter of fact, I'll just turn you over to Kendall, and then I'm going to come back in a while. So I am going to, just 1 second. Kendall, you can unmute yourself if you're there. I'm going to unmute you. Kendall, are you there?
Yes, I'm here. Can everyone hear me? Just put a.
Okay, I'm going to make you the host for now.
Okay. Can you hear me, Paul?
Yes, I can hear you.
Oh, good. So that means the others can.
All right, so I'll make you host and you can go ahead, and I'm going to stop share my screen. You can share your screen and do that. I'm just taking a call here and I'll be back in the next minute or two.
All right. All right. Pleasant good night to everyone on this call. First, I'm going to just backtrack a little bit. I don't want to put any separation, but we have two different groups. See, when I say two different groups, everyone is from IM. However, Paul has an organization and I have an organization myself. However, my people, we're not so far as what we're looking at here right now, right? We didn't reach so far. So I don't want you all to be confused. I don't want anyone to be confused, okay? So as I said, I will try my best to explain as much as I can, as simple as possible. If you have any questions, you could shoot, come to me, message me, and I will definitely explain things to you. All right. What I try to do for now with my people is have them to go to the back office, use up the back office, learn the basics in terms of the terms that is used when coming for trading. Look at the videos and basically look at the harmonic scanner to understand when to buy, when to sell, and take your trades from there for now, because the Harmonic scanner has improved a lot, right? The Harmonic scanner has improved a lot. And those of you who are using the Harmonic scanner, I'm sure you can testify of that, you've been in profit. There are some people who signed up last week and they organized a live account, and they're actually making money right now while they are learning, okay? And that's the power of this platform. While you're learning, you can earn while you're learning, all right? Now, we're looking at the trading view. Trading view, I haven't introduced that to you guys yet in my team. I haven't introduced that to you yet because I want you to understand the basics, all right? I still have some other basic stuff to explain to you before we even get into trading view, right? In terms of the trend of the market, as Paul mentioned, the pullback and those things. So if I talk about anything tonight, please don't get confused if you don't understand. As I said, we're gonna get to that point, all right? We're gonna get to that point. My motto is no one is left behind. I will not leave anyone behind. All right, so don't even though you don't get it tonight, don't be scared, don't be worried. All right, I will definitely, you're gonna reach to the point where I will explain all this to you and we're gonna get things started out. Okay, just give me 1 second. Give me 1 second. Let me just take a card. All right, sorry about that. Yeah, I had to take this call. Right, so here, as you see the charts, as Paul explained before, you got a candle. The blue candles represent that the market is going up. Red candle represent that the market is going down. All right, color code it so that you can understand what is going on. Paul, are you there? I just need to find out something from you. I just need to know on your team what the people are here. If it's beginners or if it's people that have been there for more than 2 weeks.
So I have about 4 persons who are beginners, and the
beginners
other,
have less than a week.
And yeah, less than a week. Yeah, and the others are traders.
Okay. Now, all right. The reason why I ask, because certain things I will explain for the beginners going to be confusing to them. It might be, because we might have to explain certain things like trend line up, uptrend, downtrend, higher high, higher low before they could really understand what's going on.
Right.
But I'll try.
So here's a suggestion though, in that even the beginners I would have invited here on this call really is so that they get an understanding, not expecting them to understand the trend line and what's actually going on here. The focus of this really are for those who really understand what the trading is about, but learning. In that the foundation still with this would be to start off learning from the academy and understanding. But this just gives you a picture as to where you need to get. So you're going to put a global understanding. Because if we get too deep in trying to get them to understand this here, it's like you're trying to get to level 5 when you haven't started at level 1. But just so that you can have an idea, this is where we're going. So when you start going to the academy, maybe you to the middle of the 100 series, the 100 series, you're going to say, okay, that it makes most sense then, because I now know where I want to go. Because trying to get a beginner to understand actually what's going on here at that level here would sort of change the learning process, and the academy may not appeal or may not make full sense at that level. But it's just for them to understand, here's what, this is how easy it is to do a trade, but this is what we really need to understand, because no 1 or 2 session, it takes quite a long time to understand it, and that's why the levels are broken up like that in the academy. So I just brought on the new persons so they actually see, here's what. When you start seeing the videos, this is what is done. This is how the analysis is done. So we place a trade, yes, but this is why we do what we do. You get a signal, but this is why. So they just get an overview. But it's mainly for persons who have been trading to actually say, here's what. I understand that trend and I understand why I should wait for that trade or why I should take that trade now. Or you know what? I think I should let that trade go on for a while. And learning is like, I don't just come and say, I have 20 minutes, I must put in a trade. You must realize 90% of your time should be spent analyzing, and the next 10% is to execute in that context.
Okay. All right. Thank you so much. So let me warn you, don't get confused. All right. It's not difficult at all. It's very, very easy. All right. As I said before, I'm at a stage with my people, explain to them, well, basically looking at the videos in the IM Center and looking at the harmonics in order placing trade on your demo account. Right now, right? So for now, understanding how to look at the harmonic scanner, how to read the harmonic scanner, and how to basically place a trade on your MT4, on your phone, or we haven't even get to the computer as yet. How to place that trade on your MT4 from the harmonic scanner, right? And I said, well, after we do that, then I want to make sure we give some, individuals a little practice to make sure they understand what they're doing, and then we're going to move one step forward. All right. So what I'm going to explain here, please don't get confused. Please don't think that it's difficult. I don't want to scare anyone. All right, because this is very, very simple. Right, very, very simple.
All right. So additionally, yeah, let's just view it as, okay, you just won an Audi or maybe a Ferrari and you have no license. So here's what, before you start driving the Ferrari, let's do a little Corolla or something. Take your practice on the Corolla, and when you're confident enough and you get your license and you can go over the hills freely 2 months without an accident, we're going to hand you the keys to the Audi. So that's what's going on here tonight. So you're going to see where you have to get. But for now, you sit back and just watch what's going on.
Okay, thank you. So in light of what Paul mentioned, let me just explain what we usually do. All right. As Paul said, no, the market is your mindset have to be right. If you come on the market and you're scared, then you're going to end up in problems. All right. Hence the reason why we give you a demo account to practice and get control of your emotions. If you watch, IM also offers you to improve your self-confidence, to improve your mindset. Hence, they recently have Bob Proctor on board to help you with your mindset, training you with your mindset. All right. This platform is have a lot to do with your mindset. All right. Now, let me show you basically what we do. So a few things you look at. Again, you're gonna get familiar with it. We look at price action, something to keep in mind. We look at the trend, right? Something to keep in mind. We look at also whether the market is pulling back or not, right? Again, you're gonna learn all those things looking at the video in the back office, right? You're gonna learn all those things looking at the videos. All right, so all those things that I just mentioned, they will literally show you the information in details, looking at the video in the back office. So I'm skipping all this. So here's how we analyze the chart. So first of all, I look at the trend of the market, right? First of all, I look at the trend of the market. And to look at the trend of the market, I go to a higher time frame. When I say higher time frame, you have like the 1 week, well, you have up to the 1 month. Right, 1 month, right, up to the 1 month. So I look at the I start at the 1 week, right, and I look at the direction of the trend. Let me explain myself. All right, look at the 1 week. So for instance, I take my trend line, and again, I want to show you guys how to draw a trend line, what to do. I take my trend line and I draw it from one end to the next. And if you notice, this direction here is a down, right? This trend line, what I drew here, it's showing that the market is going down. So the market has been going down from June 2015, to currently to April, right? To April, to where we are right now. All right, the market has been going down. Okay. And this pair that we're looking at, it's USD JPY. right? That's the US dollar with the Japanese yen. Okay, so this currency pair has been in a downtrend from since June, which means that the US dollar has been dropped. Well, right, the US dollar have been dropping. Is that right? Yes, USD, yeah. And the Japanese yen has been a little bit strong, you know, and that's what they're actually saying. All right. So after that time, you're gonna understand what I'm talking about over a period of time. So with this here, I look at the 1 week. Right, I look at the 1 week and I draw a trend line. I pull a trend line. So I know the direction is going down. Then I go to 1 day and I get even closer to what's going on. Now, if even though we see a downtrend here, now we have a few things are happening within the time span of 2015 to now. We had a lot of things happening. All right. So let me just show you what's happening here. Right. So for instance, the market up, look, it came all the way down here and it went back up. All right. See, a lot of things are happening here. A lot of things are happening here, right? Within the space of time. So the reason why I go all the way back to June 2015 is to look at the history to know exactly what's going to happen at the moment right now, and also what's going to happen in the future. All right. So we know what's going to happen in the future. All right. Based on what happened in the past, you're going to know what happened in the future. All right. So what we look at, again, you look at the trend line. Let me pull the trend line. All right.
And I just made you co-host rather than sending your course, because what you have to do, you have to follow to see if there is anybody trying to get in, and you have to allow them to come in.
All right, no problem. Right, so over here, I go from the 1 day, I go down to the 4-hour time through, and basically the time frame means that every candle, all right, every candle will basically form in that particular time frame. So for instance, when I clicked on the 1 week, every candle that was formed, it formed in 1 week. When I look at the 1 day, every candle that was formed, it was formed in 1 day. Now at the 4-hour, every candle that is formed here is formed in 4 hours, right? Down to the 1 hour, every candle that is formed has been formed in 1 hour, okay? So that's the basics, right? Basics. So as I said, we're looking at the trend, and as I go lower down in the time frame, as I go lower down, I will also pull a trend line to see where the market is currently. So for instance, we see what happened in the past, and we know it's a downtrend. So we're looking at the 1 hour time frame. All right. At the 1 hour time frame, I will go to the last trend line leading to going toward where price is currently. All right. So if you look at this red line here, this red line here is where price is currently. And the recent trend leading to where price is currently is this right here, right? This right here. So what I will do, I will draw a trend line on top of it because it's a downtrend right here. So because it's a downtrend, I draw my trend line at the top, okay? And using trading view, you're gonna get a better, it's user-friendly in terms of analyzing the chart, maneuvering the chart and so, all right?
All right. Additionally, also, as Kendall said, he's drawing the line on the top of it because it's a downtrend. But the concept of understanding the direction of the trend line is really the trend line always goes towards the right side of the price. Always go toward the right side, because if you so happen to draw the trend line on the reverse side, you just made a mess of it and you would never be able to really understand the market. So the trend line goes towards the right side of price. So the trend line above here is towards the right side. If it's an uptrend, it's going to go the other direction, which you're going to see in a while when he does it. But it always goes towards the right side of price. So this is a right-handed system. So the left-handed people, stay back and relax.
Right. So, right, as I said, if the price, if the trend is going down, well, I usually say on the top, and if the trend is going up, I will leave it at the bottom, as Paul rightly said, on the right, at the right side. Okay. So, for instance, you see at that point right here, the trend went up, right? So you have to put it at the bottom of the trend. If it's going down, you put it at the top of the trend. All right. Now pay attention to this. I am going to delete this line here, and I'm going to go back in history to show you what happened in the past, so you could understand what is happening in the future. Okay. I'll show you what happened in the past to show you what's going to happen in the future. Now, look at this here. This small trend line right here, right? Again, the market fluctuates. The market go up, it goes down. The market never go just up in one direction for a long period of time, or it never go all the way down. It always fluctuates. If you see, it went up, it came down, it went up, it came down. All right, that's what the market does. Okay. Now, with this, at this moment right here, price went up. So what you're gonna do, you pull your trend line right at the bottom. You pull your trend line at the bottom, trying to touch the wicks of the candles, wicks or the candle itself, and you will pull your trend line further than price. So now watch what happens. When I pull my trend line, what am I looking for? I pull this trend line. Now what am I looking for to know what to do? If the trend remain, as long as the trend remained on top of this trend line, then the market will continue going up. As long as the market right remain on top of this trend line, it will continue going up. Whenever price breaks or passes this trend line, then the direction will change. If you understand what I just explained, put a 2 in the chat for me, please. If you understand what I just explained, put a 2 in the chat. I'll repeat it again before you put it 2. I drew my trend line because this is an uptrend here, right? Now when I draw my trend line at the bottom, as long as the price remain on top of this line, the market will, right? The price will continue going up, right? The market will continue going up. Whenever price breaks this trend line, the market is going to change the direction. Whenever price break the trend line, the market is going to change direction. So if you understand that, please put a 2 in the chat for me, please. Put a 2 in the chat if you understand. If you don't understand, put a 5 in the chat if you don't understand what I just explained.
So also, while you're looking at what they're doing here, if the price remains above, how do I know when I should get into that trade? So some persons may get into that trade before me, and I come and I realize I draw my trend line. How do I know? Do I just, because I see price above the line, I just jump into the trade anytime? How do I know?
That's a good question. However, Allison didn't understand what I said, so I have to repeat it again. Okay? And I said, my people, I will explain those things to you, right? I know I don't want you to get confused. I'm going to explain those things to you. Now, for instance, this is an uptrend right here, just at this moment right here, from here to here, the market has been going up. Okay? You pull your trend line, and you see the market is going up. As long as the market stays on top of this line, it will continue going up. All right. Whenever the market break this trend line, or the candles, I should say, passes this trend line, the direction of the trend will change. The direction of the trend will change. So for instance, look at this. It was going up here and it passes this line. The fact that it passes the line, then you see it went in a different direction. It went down now. It stopped going up and it started going down. Paul, I understand your question. I will answer the question, but let me just show a few other examples so that others can see what I'm talking about.
Sure.
Now, let's go back in the past.
Your
I'm
camera
going to go
is a little small. Just increase the size a little. Okay.
Right? Let me go back in the past and I'm going to draw a trend line. Just randomly, I'm going to draw a trend line. Okay? Randomly, I'm going to draw a trend line. So I'm going to draw a trend line right here. Right? I'll draw a trend line right here. Okay? Now look at the principle I'm trying to explain to you. Whenever the price, if the market go in a particular direction and you draw a trend line, whenever the candles passes the trend line, it's going to go the opposite direction. Okay? Now look at this. The market was coming down here, right? And as soon as it passes this line, then it starts going in an upward direction, right? And again, as the time goes by, you're going to understand what pullbacks mean or retracement. So this is a downtrend. You see the downtrend. You see on a larger, on a larger trend, you see the downtrend. It's been going down, okay? And if you look at the higher time frame, when we draw the trend line, we saw that it was going down. So when we talk about pullback or retracements, when the market reaches to a point, it's going to come back up, right? It's going to go in the opposite direction to a certain point, and they're going to continue going back down, right? So for example, you see continue going back, it went down here, and it went back up to a certain point again, and it continued going down. So that's what I call retracement. So this point here is a retracement or a pullback. This point here is a retracement or a pullback, right? And then you see the market goes back up is a retracement, or you call it a pullback, right? The reason why going back up is a pullback or a retracement because the larger time frame, the trend is a downtrend. All right. Now let me show you again. Let me give you another example.
All right. Before you move the candle, right where you do that downtrend, do the uptrend right after it.
Okay, no problem. Good.
Crossing that trend line.
Right. So right here. So you see it's going up. So we touch the candles, and all right, it has been going up. And as soon as it break the trend, the line, you see what happened? It started going back down. Right? And we can do that right through. We can do that just constantly. We can do that. Right? We can do that constantly. Constantly, we can do that. And you'll see the same thing happening. Right? The same thing happening. Right? So we draw the trend, it going down, and as soon as it break the candle, it went back up. And again, but it didn't went back up too far. Right? And you just do that constantly, and you'll see the same thing happening. Right?
So before you move on, candle, right there on the first trend line. So the market was going down. So imagine the first candle that start, the top red candle, just go on that first candle. Yeah, right. So imagine there, you realize the market is going down. So you go for the sell. So you would have sold there and the market is going down. Find the market is going down. And at times you realize when you're trading, you have profits, and then you start losing profit when the market start pulling back. But then you may realize, here's what, I had $20 and now we go down to $10. You know what, better take me $10 and get out of the market. And as soon as you get out of the market, you realize you go down and you could have really made $40 or $50. So as long as the price stays below that line, be it does a little pullback or retracement, as Kendall is saying, you still stay in the trade. The indication that you should get out of the trade is when that candle touches or passes, not touches, but passes the trend line, as is that last blue on the bottom. And once the candle passes that trend line down there, it means you should get out of the trade because the trend is about to change. So you get out of the trade, and if you decide to stay on the day to do some scalping here, what can happen is that you can just do, so right where he's putting that arrow there now, right? So this is where you get out of the trade. And how do you know when to get out? You get out because the trend is changing. So even if you're in a trade, so like for me, for example, I've been in a trade from since Sunday evening, and it goes up, it goes down. It has been in negative for a while, but I'm not getting out because the larger time frame says it's a downtrend, which is still a downtrend. So as long as it stays below that line, I know eventually it is going to go in that direction. But if it changes and it crosses the line, like where that up arrow is, you know, here's what, it is time, let me take my profit and let me exit that trade. And if you want to get into a buy now, although the market is down, it's always safer to go on the downtrend, follow the trend. But you can also say, here's what I'm going to take a buy on that. So that's where the second trend line that he drew comes into effect. And you take a buy, and as long as price is above that, you stay in the trade. So you use your trend line to know exactly when to get out of the trade. Once the price crosses the trend line in whichever opposite direction, you know it is time to exit that trade. So that's what he just drew here with all these trend lines. So we constantly have to be drawing trend lines, and especially now. So I could say previously, before this whole Corona thing, the market was very predictable. The market behaved nice, very, very obedient. And from since this Corona really got into full swing into March, mid-March, the market is behaving very irrational. So what saves persons, as much as we have all this other signal and Bollinger Bands and whatever, the trend line to me is the safest way to trade the market presently. This is why we have the focus now on the trend line. Because in spite of whatever happens, trend line is what the market is all about. So it teaches you when to get in and when to get out of that trade. All right, Kenneth, you can go back.
Yeah, and the trend line is as simple as it gets. It's as simple as it gets, right? And I say, my people, don't get confused. I will show you exactly what to do. And it's as simple as it gets. It's as simple as it gets, yeah? Well, with that, what I just explained, let me just show you what happened here. Let me show you exactly how I know, for example, USD JPY, what's going to happen with USD JPY. I will tell you exactly what's going to happen with USD JPY. There are a few other things to consider, like price action and those things, right? So for instance, price action, you see this point right here? This point right here, what I just drew. Now, somebody's going to look at this and say, all right, this has been in a downtrend, and I am going and sell this. All right. Now, let me show you where you're going to get in trouble. That's where the IM center come in. That's where the back office come in. And so you can understand from the educators how to understand price action. Let me show you something. What happened when price reached here? What before? You see there's a zone irrespective. So this was a support, right? This here also was a support. All right. This area here was a support as well for this here, right? So price action is something you'll have to understand. And that's why it's important, very, very important to, to get your education. Very, very important to understand.
Kendall, and that's why I'm happy that you started. And earlier you said you go back way 2015 here. And somebody may be saying, well, in 2020, why do I need to go back? And it is very important because you need all your confirmation. Just imagine you have a brand new car. The tank is full, the tires have air, everything is there. You have your key, you sit inside, your license is up to date, your insurance is up to date, and you're ready to go and there is no battery in the car, waste of time. So you did all your checks and everything checked out, but one thing that didn't check out, what gives you power? And this is where the history comes in, because Kendall is saying it is important to see, and right where he has his cursor here now, what would have happened previously. When the price reaches at that particular level, something happens. So you can have 5 or 6 confirmation. Yes, it's going down. I'm going to jump in for a sale. And then you realize something happened. So there are a lot of things, and that's why he's emphasizing now the history and the price action, what happens at that point. So it is very important. Trading, again, is not a rush. And this is not a get-rich thing. Some persons believe I can just come here and in 2 days I make $1 million. Some people may make it. But at the end of the day, think about it in the sense that you have $1,000 and you deposit it in the bank, and you go back after a year, the bank might give you $23 interest on a whole $1,000. Whereas you can take that $1,000 and daily you can make 100 on it. It's more than what any institution can give you. So do not rush it, but you have to analyze. And whenever you get into a trade, you should have, as Kendall was saying, the mindset, you should have the confidence that my trade is going to go in the direction, even if it has a pullback. Why? Because you would have done all the checks and balances and you would have entered when you have all the confirmation. That's why we're going over this. But again, in spite of all the learning styles and strategies and indicators, believe it or not, people, trend lines is it. Go on, Kendall.
Yeah, I said that as simple as it gets, right? So that's, I explained, price action is very important because you need to know when the market reached before in the past, what it did, right? So for example, this is a an area of support. The market came around that area and it went back up, right? It came around that area and it went back up. So now it came around that area here and it went back up. So it's more than likely when the price reach here again, then the price will go back up, right? It's more than likely that the price will do that. And look at that. Price is right where we see in the past that it went back up in the past. And that's what we call price action. So what is possible here? What is possible here is this, right? This will basically come here and shoot back up, right? That is possible here. And here now, that's where your trend line comes in. That's where your trend line comes in. So if price reach at this point right here, it's possible that it can shoot back up. So sometimes you put in a trade and you say, okay, you see a trend, you sell, and right at the point you sell, that's the exact point the market change direction and go on the upside. Paul, have that ever happened to you?
Many times, many
yes.
times.
And that's what happened.
This setup looks like a perfect setup for sale. I mean, 95% the sell is the market is going to go down. But
That's
because it is at a zone where many times before, when price gets to that zone, it changes direction. The smart trader would say, here's what, I have to have patience. Let me wait and see. It may bounce and go back up, or it may pass it. So I'm going to wait and see what happens. If it bounces and goes back up, I know I'm going to go for a buy. But most likely it is a sell because the major time here is the major trend is a sell, is a downtrend. But where it is at that zone, the pullback can be very heavy. So the smart trader is going to say, here's what, let me wait and see what's going to happen until it passes that zone. And this is what, so a lot of the tools like the scanners and so, these are artificial intelligence tools. These are computer generated data. And yes, they take into account a lot of things, but nothing beats the human touch. Because for those of you who have been following the scanner is very good at prediction, but the scanner isn't always right. As much as machines are there, there is nothing as good as the human intelligence. So the machine may say, here's what, this is going down because it's below the trend line and those things are happening. But the human eye says, here's what, whenever it gets at that zone previously, it changes direction for up. So I better wait. You may take the gamble and go down, and trading is not gamble. Trading, whenever you enter a trade, you should have all your confirmation and make sure, here's what, I'm getting into that trade because I am certain it's going to go to, yes, we are certain, but things happen, the market changes, but we should get into the trade with a matter of certainty.
Right. That's right. Right. So here's what happened now. No, that's where, as I said, that's where the back office comes in with your education. That's where your education comes in, because if you're not educated, you don't know what you're doing, you're going to jump in this trade and you see, all right, you're under the trend line, I'm going to sell. But what is possible here? There are two possibilities here. Okay. Price reach this point and it will go back up. All right. And going back up now, that's a pullback. Now, how long the pullback is gonna go, we don't know. And that's where a lot of people lose their money in terms of blowing their accounts. So they see it's going on here and under the trend line, they go a very high lot size, and then immediately the market pull back up and they go in the opposite direction. And based on how long the pullback is, then the account can't handle it and they lose all their money.
So all right, we move on. There's a perfect example. Go back just right there on that screen where it touches that zone right there. Good. Show the break and retest here. So it was going up, it broke the zone, it retested with that 2 red candles, and then it went up. Explain that there one time too.
Right, good. So here's what happened. The market was coming up, right? The market was coming up, and then, right, the market was coming up. Give me a second. Let me just draw this. Give me a second. 1 second. Right. So what happened here? The market was coming up. All right. And again, you see when I draw this, what I showed you before, that's a zone that the market will respect. That's a zone, support and resistance. That's a price action, right? That's a zone the market must respect. So he went up, he broke the zone, right? He broke the zone. He came back and retest, appeared to be going back down. And you see what happened? He went up. Now, again, as I said, you're going to learn all this in the back office, looking at the educators like Vidish. Vidish teach this. I'm really, really good on teaching break and retest, support and resistance. All right. Now, something you have to remember, you have to keep in mind, whenever the price break that particular zone, and whenever you break it, it must retest, or in other words, it must pull back, or in other words, you must get a retracement. All right. And then you're going to continue going in a direction. If price never break the zone, then the price will go in the opposite direction. If price never break the zone, it will go in the opposite direction, right? I don't want to get into too much detail. I don't want to confuse, the new ones, Paul. So just keep that in mind, all right? So you have a break, retest, and go in the direction. Here, what is possible here? Price can come if it breaks the zone. If it breaks the zone, you're gonna retest, pull back, and you're gonna go in the direction of the trend, which is going to continue going down. However, another possibility is, well, you see price reach this action here, this price action right here. The other possibility, on the next candle, which is in one minute actually, 1 minute or less than a minute, the next candle I want to form, it's a possibility that price will just start coming back up and going out in the opposite direction. All right. Now, that's the reason why we draw this trend line here. So as you draw this trend line, don't bother with this, right? As you draw this trend line here, whenever price break this trend line, whenever the candle break this trend or passes this trend line, then we know that the price is going the opposite direction, right? So even though this is looking as a sell here, don't get tricked, right? Don't get tricked. All right, that's why you have to understand what's going on and what's happening there. And again, that's where your education comes in, so you can understand what needs, what is possible here. The two possibilities, or if you have three possibilities, or what are the possibilities? And based on your deductive reasoning, based on what you learn, then you're going to know exactly what's going on. And it's a possibility, Paul, because you see there's a buying pressure here on this candle.
I was just about to tell you, I was waiting for the next candle to start to tell you, here's what, explain what that candle there means, the shape of that candle.
The shape of this candle here means that the buyers is pushing the market to go up, right? And remember I said, this is a price action here where the market is up, could possibly reverse, right? But again, by over a period of time, you will understand. Don't get confused. Please don't get confused. I will explain this to you, my people. I will give you everything in detail. I have a blueprint, and I promise you, I'm going to show you exactly what's going on. I'll take my time and explain it to you guys. We cannot do it in one session. We cannot do it in one session. All right. I'm going to show you exactly what's going on, and we're going to get this sorted out. All right. So it's a possibility that the market, this candle here, let me make it a little bit bigger so you could see. All right. This candle here indicates that the buyers is pushing the market up. So I can predict that this candle, when it closes, is going to be a blue candle.
Yeah, the market is going to reverse there.
Right? It's a possibility that when this candle closes, it's going to be a blue candle. So, right? And you're going to have a wick in the bottom here, and it's going to be a blue candle going up. So just watch it and see what happens. All right? Just watch it and see what happens. So that's my prediction. But again, it's just a prediction. I can be wrong. Okay? I can be wrong. Because I am not the one that actually moving the market. Right? I'm just a retailer trying to follow the direction the market goes, so I can make the best decision possible when I'm entering a trade. Okay. Now you asked a question earlier. Where do I enter a trade? When do I enter a trade? When do I enter a trade? Now let me show you now at what point I enter a trade and what do I look for before I enter a trade. Okay. Now this is the 1 hour. So from the 1 hour, I will go down all the way to the 15 minutes. I draw my trend line, and I will go down all the way to the 15 minutes
So
and
can
look at.
right. While you're doing that, again, initially when I just started trading, what I never really learned.
Well, before you go, sorry, I jump down to the 15 minutes. You see what's going on here? You see what's going on with this? Is that changing direction on the lower time frame?
Mm-hmm. Mm-hmm.
You see that? So the blue candle start going up. So it start changing direction already. So we see definitely that's going to continue going back up. It's going to pull back, right? So just as predicted, if you go on the lower time frame, you'll see the candles, right? So you start going back up on the upside now. Go ahead, sorry.
Yes, what I was saying, a lot of the things that I learned before years ago, yes, but when it comes to the time, and that's why as you were switching the time frame there, I really would have gotten that here. Because the larger time frame gives us an understanding as to what's going on. It's like you leave from Grenville to go to St. George's. You know the bus is going to reach in the bus terminal. That's your larger journey. That's the start and end of your journey. But the bus could swing, you could go in Maribor, you could go in Broad Cove, you can go in anywhere, and all these things happen between. But the person who is waiting on the terminal for you, as far as they're concerned, you left Grenville and you're coming straight to the terminal. So all that happens in between, they're not privy to that. And this is why it's important that we understand the different time frame. The higher time frame, higher meaning a longer time frame, the 1 day, the 4 hours, and so the 1 hour, shows you things. But you don't just get into a trade because you see that on the 4 hour, on the 1 hour. A lot of things happen in the lower time frame. And that's why Kendall went down to the 15 minutes. Because a while ago, we were looking at the 1 hour and we saw it look as though it was going to turn to the up direction. But when he went down to the 15 minutes, we already saw he started changing direction because a lot of things happened. 4 times what would have happened in the 1 hour would have happened in the 15 minutes. So it is important that we switch time frame. So we should not be too eager to enter a trade because we see a confirmation on a particular time frame. It is always important, and that's why Kendall was going here. Whenever we have to enter a trade, we always go in a lower time frame. We enter in a lower time frame because we actually see what is happening in the lower time frame. So the higher one gives us an idea as to what we should do, but when we should do it, the lower time frame tells us that. That's why he went down into the 15 minutes and eventually he's going to go down into the 1 minute. Back to you, Kendall.
Yeah. Thank you. So what I was explaining earlier on, you see, let me make it a little bit bigger. You see on a lower time frame, you see we can actually see that the markets are changing already, going to the opposite direction. And that is what I was explaining to you before. So that's the area here. The two possibility, price could go back up and it will come past this, right? Break, retest, and continue on the downtrend. But you see what happening here. It started going back up in the 15 minutes. You have two candles, second candle is forming on the upside, which means that this is going to pull back here. All right. So again, as I said, don't expect to get everything in one go. It's a learning process. You're in right hands. As long as you spend time in the back office, you're safe. Right? You're safe. Don't understand all this, and we're here to assist you to explain things that even though when you don't understand. All right.
Mind you,
So
this session is also being recorded. At the end, I am going to post the link. I'm going to edit and send it on YouTube, and I'm going to post the link. So you can always go back and watch over that same session. Because believe me or not, this is a very important session. A lot is being discussed now, even if you may not think it's a lot. It's a lot of worries. It can save you a lot of losses if you follow that kind of principle, what's going on here tonight.
Yeah. So where to jump in the trade? Where at what point you enter the trade? So I said you started from the higher time frame. Look at the trend, and we call it directional bias, right? You refer to the directional bias. So when you look at the direction of the trend on the higher time frame, then you go down to the lower time frame to see where to enter the market, all right? And where we enter in the market, we're waiting for a pullback in order to enter the market, right? We're waiting for a pullback. And I'm gonna just pull up some arrows here just to show you where to enter the market. So at this point, right here is a point you could have entered the market, all right? This point is a point you could have entered the market, and I will explain why. Here is also a point you're going to enter the market. All right, I will explain why. All right, this is a point of entry. This is a point of entry. So if you notice, right, also this point here was a point of entry right here, right around here. All right, if you notice, from the minute time you spot the trend and you enter here, whenever you take your profit, you will have to wait, because at this point, every candle is 15 minutes. Right? If you count, that's probably about 2 or 3 hours on this here. So you'll have to literally wait, you know, to get a proper point of entry. So now you want to take it on as you're going down, you want to take it on the highest point. So for instance, you have a high, then you have a low, then you have a lower high, lower low, lower high, right? Lower low, lower high, lower low, lower high. All right, and that's where you go. All right, and until you reach all the way down. All right. So the point is, you always want to get on. If you get a long trend, you always want to get on the lower high. The lower high, the lower high. You're waiting for the lower high to jump in the trade. All right, you're waiting for the lower high to jump in the trade, or you're waiting for the retracement, or you say you're waiting for the pullback. All right, and this will take patience, 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 patience. All right, so that's basics, and it is as simple as it gets. That's what I do. There are other techniques, right? There are a lot of other techniques you can use, and everyone is different, right? Everyone is different. So again, when you go in the back office, you might see something that might suit you. Something that this here, what I explained, might suit you, and as simple as it gets.
Also, Kendall, one of the advantages of using TradingView, you may just draw a trend line on any one of them, Kendall. Let's just look at an entry point, for example, on any one of them here. Just put a line to show where we're just entering.
I mean, arrow. You want the arrow?
Yeah. You could just do one arrow. So let's just see the next entry point. So where's the other entry point? Right. So what you can also do with TradingView affords you the ability to put alerts. So you don't have to sit and wait for it. So not because it's a downtrend, you say, okay, I'm going to enter anywhere. Yes, you can enter anywhere and later on you get profits, but you can maximize your profit if you get the opportune time, if you wait for the pullback in the right moment. So you can do an alert on the TradingView and you go do your thing. And once the price reaches that particular point, it sends you an alert on your device. It can do an email, it can do a text, it can do a pop-up. So you're doing what you're doing and you say, okay, fine, I just missed that entry and the trade is going down, fine. But I want when it gets back up to that level, I get an alert so I know I should get on my device. And at that point, I can do a sell or I can do a buy. So TradingView affords you to do an alert. You just right click wherever you want the price to alert you, and then you just add an alert. So you don't always have to sit and wait because each candle there is 15 minutes and that's a long time that's been going there. It's about 4 hours that's been going just between that two candles. You don't sit at your computer for 4 hours, but you can do an alert. So once it gets to that price, it pops up, you get up, you check it, and if you decide to enter the trade, you enter the trade at that time. So that's what an advantage of TradingView also.
Yeah, and as new traders, we strongly advise to just look at 1 pair, 2 pair. If you just take 1 pair, 2 pairs as the most, and you follow this principle, you will, as long as you understand what you're doing on TradingView, you will maximize your profit. It will be unbelievable, right? You don't have to look at plenty pairs. You don't have to look at plenty. If you follow 1 pair, you're knowing when it's going in the direction of the trend, you're knowing when it's pulling back, and every time you get a pullback, you will kill the market. And you will be so amazed how easy this is, right? And I must say, getting on this platform is a real blessing, right? It's a real blessing. And I will always encourage individuals, please get in the back office. That is where you're going to learn the basics, right? You're going to learn the basics. If you understand the basics, anyone can do this. You understand the basics, the terms that you need to use, you understand how you draw a trend line, anyone can do this. Yeah, anyone. It
So
doesn't
additionally, one of the issue, one of the problems, or one of the, how should I say, the deterrent to progress when it comes to trading. I mean, sometimes you are there and you may lose, and when you lose, you know, it sort of make you feel in a way, you know what, I think I should give up on this and I should do that. But the mindset, as Kendall is saying, yes, we're in this so that we can survive, we can make money, and there's a lot of money to be made on the platform. But control is one aspect of it. But also having the discipline and the mindset to get into that here. We have to take it gradually. It is not just about, okay, fine, I could get that today and I want to do that, because you may just happen to fall on a good day, and I fall on a good day, and then you make so much, and the next day you decide to follow the same strategy and ease up some of the precautions that you were using before, and then you realize you can lose all that you would have made. You have to learn and understand that the market behaves like, I mean, it's humans that make it up. The market has a mind. So it doesn't behave the same way every day.
That's right.
You have to follow the same principles. So you do this today and you find, okay, here's what. I understand it, man. When I'll just wait for the pullback and do that here. You have to be consistent with your practice. You have to draw your trend lines. You have to do it in spite of how good you think you are. Kendall doesn't trade without doing a trend line, because he knows that in spite of how much he understands it, the proof is in doing it. You have to do it so that you can make good use of it. But it is not just about grabbing too much. And what wasn't mentioned yet so far is understanding what the leverage is all about, what your account can support, and you should not over leverage. Fine, I realize I can get 50 pips in that market. And okay, if I do 10 trades and they were all successful, and I was trading at, let's say, 10 cents a pip, you know what? No, man, my last trades were good. Now I think I could go $5 because I can maximize. And then that's where the trouble is. That's what happens sometimes. The market just, like, for example, from since yesterday, the New Zealand has been behaving so strange. I mean, New Zealand dollar it lost about 200 pips in just a matter of 10 or 15 seconds.
Yeah.
So
That's last night.
imagine you were trading for a sale, and we had some sale on it. I had sale on it. Kendall had sale on it. And I was in a lot of profit, and all of a sudden I got an alert, and when I watched the and Kendall called me too. And only to realize, here's what happened in the market. I just moved from so much profit into so much loss. And only to realize, here's what the New Zealand dollar would have lost 200 plus pips in just a matter of seconds. My son had a trade inside there, and then he called me and said, Dad, I mean, I had this stop loss here, and the thing just took me money just so, and then it just settled back itself after. But again, in trading, we have to learn to cut our losses too. We have to learn to know how to lose, and when we lose, be satisfied. And we should never do revenge trading. Because I lose that trade, I must get a trade to make it back up, and we jump back in the trade and realize it went up, and they jump back in, and that's problem. So it's all about the discipline. Accept defeat, and you live to fight another day. You may have a $500 on the account, and then you lose $200. Be satisfied. As a matter of fact, again, you should not be losing 200 when you have 500 on your account. If you trade with proper risk management, you should not be losing more than 10%. Some people say, or even 5% of your account. So having an account with $1,000 and you say, oh, my account blew, it is always because you have been over leveraging. And if we stick within our range, we stick within our limit, whenever we lose, it shouldn't hurt us so much. Because imagine you have $100 account and you do a trade and then you lose $2 or $3. Well, it shouldn't hurt you so much because you would have used proper leveraging. But when you have $100 and you say, I'm trading 50 cents a pip, and then you come and lose $60, it must hurt you. Why? Because you disobey. The market has rules, and obedience is the key when it comes to the market. Follow your strategy day by day. Just grow your account daily. Dog luck is not cat luck. Some people accelerate and they move fast, and you want to move fast, and they may make it. But at the end of the day, you may not realize what happens. Yes, they make it here now, and then they may lose all after. Gradually, you grow, and eventually you're going to get there. I can tell you that because I have a lot of experience of that. And that's why I'm where I am today. Because I had a lot of big losses, and because of those, then I just changed my mind. You know what? Let me just forget that. And you'll be 2 months, 3 months, and I remember, hey, I have a trade in a company with a little money on it. Let me just try and put in a trade. And you put in something, you win a little, and then for 2 days, 3 days, I'm in it. And then I get back again on my big thing, and you lose, and I give it a break. I've been trading 16 plus years. And it's only from since last year I joined IM, I now have structure and understanding as to how it goes. And thanks to the team here and Kendall and others who would have shared. And what we are doing here is, nobody would have done that for us before. So then again, there's a lot of appreciation for what the team is doing, because even when I joined IM, I signed up. Nobody showed me anything about IM, but I navigated and I decided, okay, fine, we're going to work with other people. So what you're getting here, just persons trying to assist you to get there, because too long we have been slave for, and you realize how easy it is once you're properly trained, how you can make it. But it's also always about the discipline. And we're going to work together as a team, and together we can reach where we want to get.
Yeah. Just to share some of my story with you as well. Where I'm at right now, it took me a while to get it. When I say a while, it took me a lot of losses. I had a lot of losses. Not to get anyone scared, but I blew 4 accounts before I got where I'm at right now. I blew literally 4 accounts. The first time I deposited $100 in my account, and I used the harmonic scanner together with swipe trade. Okay, I use the harmonic scanner that I am provided when you sign up together with swipe trade, and I was able to build $100 account into $1,000 account. All right, I built it to $1,000. I can't remember exactly how long it took, but it didn't take very long. All right, and here's what. Let me give you. The Wednesday night when I made $1,000, I was so excited. It's like, yes, I told my wife, babes, I made $1,000. The very next day, the Thursday, guess what? Because I felt I had $1,000, I over leveraged, which means I upped my lot size to a higher lot size. And the market usually behave very funny on Thursdays. The Wednesday night, I made $1,000. The Thursday, I lost all my money. All of it got lost the Thursday. Just give me 1 second. I need to take this call. Just give me 1 second.
So while he's taking the call, and I can tell you on the same thing. Sometime already I just did a new account when sometime maybe early March. So I did the account the Friday morning, and I just put $200 on that account. And the next Wednesday, that 200 went up to 7,000. So in just about 4 days trading from 200 to 7,000. And Thursday, because of over leveraging, that money went down to about $150 because the market turned. And why? Because of over leveraging. So at the end of it, it is nothing about greed, and we have to stick to the formula. Here's what: if my account is under $500, I must stick to my lot size of 0.01. You can take multiple trades, yes, fine, but you have to understand, here's what: because of the size of my account, let me take 2 trades. I can see other beneficial trades, but I'm not in a position to take those trades at yet. Let me gradually build the account. It goes up to 1,000. I can take maybe 0.02, 0.03 sometimes. And as it grows gradually, then you're in a position to increase. Never have the confidence in yourself and say, well, here's what: I am so certain about this trade, I can over leverage. We all do that sometimes, but because the market is controlled by emotions, we people control the market, anything can happen. So the risk management is always key. You make sure based on the amount of money you have on your account, it's not about greed, as I said over and over, and I keep stressing on that because I know the effect of this. For many people who are here, you really don't know your true self. And here's what: money just brings out the true you in you. The you that you never knew, money brings it out. So if you are a giving, helping person and you have money, you're going to help people. If you're a selfish person and you didn't know, when you start making money, you're only going to go get more selfish. So the money brings out the true you in you. And persons just can't stop getting enough of it. And this is why you realize persons are going to lose a lot, because here's what, I can make $200 on that trade. But if I double that, I can make 500 or 700 or whatever. And then you do that, and for some reason the market just turns on you and you lose everything. We have to learn, and as study saying here, discipline is important. And mind you, IM teaches you that. And this is the biggest downfall for any trader. Discipline. And in all my sessions, all my training sessions I would have had, persons who are here now who would have been to my training session can testify that I always say, here's what, discipline, taming the lion in us, the beast, the greed in us is very, very difficult. Because if I realize I did 5 trades now at 20 cents and I made $100, you know what, I should have really double that now. I should have make it 50 cents a peep or $1 a peep, and you see, I should have make $3,000 on that same trade. So next time you will want to do that. So we just go ahead and we stick to principle. But here's what somebody's asking here: when is the best time to trade? I mean, from experience, now we realize that on Thursdays, because different time zone, different news, and so is being released from different places, the news really doesn't change the market, but the news just accelerates what happens. So if you're in a downtrend, the news wouldn't just make it get into an uptrend. What can happen? Some of the news can make huge spikes. So it's in a downtrend and some news breaks out. It may just take a spike up, but eventually it is going to settle and continue in the direction. So it's about knowing on which days and which currency pairs the news influence. So that's why you guys can really say Thursdays has proven to be very, very bad days. Because again, if we trade a lot on the euro, on those days, things happen on Thursdays and certain news happen. So you have some huge spikes in the market then. And then whenever there are huge spikes, the market just come back and the market just is almost dormant for a while. So that's why Kendall said earlier, when you start, just choose a few pairs, 1 pair, 2 pairs, 3 pairs at the most, and learn it, understand what moves it. And then you can learn and you can know when to trade. But again, it's never on the first Friday of every month, you have what you call the non-farm payroll news, NFP. And this is the news that comes out from the US. Everything about unemployment and so comes out. And this is the single biggest mover of the market. When the NFP comes out, first Friday comes out at 8:30. Sometimes the time changes and it comes out at 9:30. But this is what moves the market the biggest. It is not a good time to trade because the market moves really, really crazy. And half the time you might be in trade, and it's never a good time to have trades open around that time. There are times if you catch it in the right direction, you can make a mint out of it. But again, you have to understand. So it's always good when you listen news. And as I tell persons when I do all my training sessions, a lot of adjustments have to be made in your life. You have to start changing your sleep pattern, change it to the way you listen news, the kind of news that you listen. Because now that your money is involved, the news has an impact on the trading. So when you hear news, you may hear that news and say, okay, here's what, I think I can take a listen on that. So about here's what, oil price drop right down. Okay, well, gas price should get cheaper. That shouldn't be your first thought. As a trader, if oil price drops, you know eventually it's going to go back. Maybe I should take a trade on that. So you have to change your mindset. So when you listen news and you hear that, you shouldn't just laugh about that. Oh, they say they're going to fight some war in the Middle East. Oh, well, they always fight in war. You have to think, here's what. Anytime you talk about war, gold price goes up. People start moving their money towards gold. So when you hear war is on the horizon, and as a trader, you think about putting your money into gold. So these are the kinds of adjustments that you have to start making, because here's what, the news is designed for people to influence us. The news modifies our behavior. The news, well, I don't want to get into that anyways, but here's what. So you have to start to learn when you hear a certain kind of news, think of a trader. How can I make money from that? How can I improve my trading from that? So this thing is going to happen. So now with the corona and people aren't moving around, there is so much oil that is not being sold. Storage is a problem. So oil price goes right down. So now is a good time to buy oil if you're trading oil. Eventually when the markets open again, oil price is going to go up because people are going to start driving around again. So you think as a trader, what happens? Now we have all these people home on unemployment, and so money, a lot of money is being flooded on the market. What's going to happen? Think about Bitcoin. Bitcoin has been, well, as a matter of fact, today Bitcoin rose quite a lot. So it fluctuates a lot, but we have to start to understand the news, how the news influences markets and currency. So don't listen news as news for melee anymore, but listen news as a trader. How can I benefit from that particular kind of news? That's what it's all about.
Yeah, yes, Jason, and both the technical and fundamental is important to marry both of them. Very, very important. Right, and very, very important. Yeah. Right. So I was saying before. Sorry, I was interrupted. Try to take it there from Paul. I was explaining basically what I've done in the past, the mistake that I've made, and try to avoid my people from making the mistake. You know, over leveraging. I explained to you what to do in terms of the trading. If you have $100 in your account, exactly how much trades to take. Just as long as you listen, you do what I ask you to do, you'll be fine. You'll be fine because I've learned from my mistakes, and I don't want others to be in the same situation that I did. So, for instance, I advise my people, as long as you have $100 in your account, for every $100, if you do $100 in your account, do not take more than 3 trades. 3 trades is the maximum you're going to take with a
0.01.
And we're sticking to 0.01 until we reach to $500. We're staying with 0.01 until you reach $500. All right. So I got a blueprint on how to basically get back your initial investment within 30 days. All right. Basic principle, how to make your get back your initial investment within 30 days. So you do as I ask, you will definitely be able to get that done. All right. Not more than 3 trades, 0.01, and you're basically using the harmonic scanner. You don't know what you're doing. Listen, the good thing about it. You don't know a thing of what you're doing. You don't know how to analyze the charts. You don't know another thing. All you need to know for now is how to put in the trade, how to place a trade in, how to read the harmonic scanner, knowing when to buy, when to sell. You go on the harmonic scanner because you paid for it. And when you see an opportunity, take 1 pair and do 3 trades on 1 pair with a 0.01 lot size. If you don't want to do 3, do 2. Or you could do 1, but do not do more than 3. Do not do more than 3. Put in your take profit, put in your stop loss for all 3 of them, and you're waiting until it hits either stop loss or take profit. Just wait until it hits. You're not going to enter another trade until the trades jump out. When it jumps out, you have full access to the harmonic scanner. You go back in the harmonic scanner, get your trades, 1 pair, 3 trades, and put in your stop loss, put in your take profit, and just wait until it hits. If you do that within 30 days, watch what happens. Within 30 days, watch what happens. You can do this all day, because the harmonic scanner always update trades. They always update the trades. All right. So as long as you hit your charts are clear, you can always go back and look for an opportunity again, get in another trade, 1 pair, 3 trades, and put in your take profit and your stop loss, and you're good to go.
Kendall, unmute Jumar Bain. He wants to ask a question.
Okay. Laurel hand is also raised. Just give me a second.
Yeah, go ahead. Yeah, follow that. Yeah.
Hello?
Go ahead, Jumar. We can hear you. You're a bit low, though.
You finished what? You heard me better?
Yeah, go ahead.
You finished what you were saying? I didn't want to interrupt because my hand was up for maybe like 30 minutes at the time I wanted to ask a question. So should I go ahead? It's a question I wanted to ask when you were... Okay. All right. Now, when you were showing us about the change in direction, right, with the trend. Hello?
I'm here. Go ahead.
Yeah. I understand what you said about when it hits the trend, it changes direction. But what I don't understand at that time when you was explaining is how you set the trend. Let me tell you what I mean. By just looking at the chart before you send the trend, before you made the trend, I could already see where the candles are breaking. So by the time you set the first one, drawing the line, I already knew where you was about to set it because I can already see where the candles are breaking. So, in other words, if I'm taking a trade, I assume I will not know when the candles are breaking. So how would I know? Because all the trends you were setting there when you were making the lines, I knew where you were setting it because I could already see where it was breaking.
Wonderful. Yeah. Yeah.
So that's what
Let me just show him here real quick as he asks the question, Paul. So for instance, let me just delete this one. All right, let me delete everything on the chat here. And look at this. So for instance, this year, right, the market is nothing can happen ahead of this point as here. So we've seen a small trend going up here. So what I will do, I am starting my trend below, right, guys, going up, and I'm only touching the candles or the wicks of the candles that is already formed. Right, I'm only touching the wicks of the candles or the tip of it that is already formed. And I'm waiting.
But you also, as you said it earlier to Kendall, you extend the line further because this is like a guideline, a railing for it to go up on.
That's right. Did I answer your question, Jumar?
Yes, I have a clear understanding where you're saying you're following the candles, right? Yeah. So just in that trend line, what you just made there, if it happened to break, okay, see the last candle is a small red, correct? Mm-hmm. If it continues and it happened to break anywhere along that small trend line, there's a possibility it will change the direction?
Not possibility, it will definitely change direction.
Okay, no, yes.
Whenever it breaks this, it will come back down.
Maybe candle, bigger candle, just make it, yeah.
Right, whenever it breaks this, it will come back down. So this is an indication, right? What happened, as long as it continues going up, it will stay on top of this trend line.
Right, because okay, because just today I was looking at a video and they said that the two candles, you said you make the trend line because of the candles, right? You following the two candles. Mm-hmm. And at the third one is supposed to, if it breaks by the third one, it will change. Is that correct?
No, I don't really decide how many candles I'll wait for before it breaks or not, or how many candles it touches. Yeah, the reason why I don't do that, because when you get to the lower time frame, the market does crazy things. Mm-hmm. Right? Again, for example, you might touch one candle, but you might have a spike, right? Where a candle just go really long, whoop. You know, as Paul mentioned earlier on, within a few seconds. But the fact that it breaks the trend line, it will obviously change the direction.
Okay, well, thank you. I got my question answered because you showed it in a different way at the end.
Yeah. Some people,
Laurel had a hand up for a while too, so.
Yes, I'll just Laurel. For instance, what you're talking about, in relation to, I think I bumped into that video before, that's an IM Center. Now, to give you a solid trend line, what I think you would have heard is
you need 3 candles, 3 touches.
You need 3 touches on that. So that means it gives you a solid trend line to know that's a particular trend. Mm-hmm. Okay? So for instance, like this, when it touches at 3 points, then you know this is a solid trend line because it touches, the candle touches the trend line at 3 points.
Yeah.
Right? So this principle also apply, but remember, whenever the candle passes the trend line, then you know it's changing direction. Okay, but the principle that you're explaining also applies. Yes, Laurel. Yes, you have up. Go ahead.
Hey, good night, everyone. I got my question. The question I wanted to ask, Mr. Millet had pointed out, so never mind.
Okay. So to answer that, a question was posted here. When is the best time to trade? Really, there are 4 trading blocks, 4 trading sessions, 4 trading markets.
Paul, let me just pause you.
Okay.
The individual should go back in the back office to find that out. Because like repeating information. So they have to, I don't know who asked the question. Let me see. The reason why I'm saying that, you're giving individual a chance to look at the information. If we answer all the question that
I agree.
the information there, they wouldn't go back. So let it go back and find the information in the video.
Because they paid for that already. Yeah,
that's
they paid
right.
for that.
That's
and,
right.
and I'm happy that you raised that. And this has posed to be a problem in that persons, when you join IM, it's an institute, it's a university, it's a school. And when you pay for tuition, you're supposed to go to your classes and attend to your classes. And what we're doing here is just, like an assistant teacher just assisting you. I mean, you wouldn't get it in that simplicity in the academy, really. But the onus is on you to make use of the academy. You go to the academy and you study the videos and you get what they're designed for you to get from it here. What we're doing, as Kendall is saying here, we sort of are just, well, cheating is not the exact word. It might be a strong word, but to help to solidify and explain and to get persons confident. That's what we're really trying to do. We're trying to build your confidence. So, okay, here's what. Many of us would have gone to school and we started working before we went to university. So here's what. I've been at university, and in university, our children were struggling there because this is the first time they would have done that. Because we would have had the experience and the practical experience. When it comes to the theoretical part, it's just a walk over for us. And for those who haven't done the practical, it's difficult for them. So what we're actually doing here, we are giving you the practical so that by the time you get into the academy, it makes a lot more sense. So really and truly, we are getting you where we are much faster than we have gotten there ourselves. A lot of trial and error would have gotten us to where we are. And we're trying to raise that whole error path for you and to do that. So yes, we are here to answer questions, but as Kendall is rightly saying, we should not answer every question because you have to make use of the academy. All right? All right, so clarify your question here, Jason.
Yeah, Jason, go ahead. You can unmute your mic, You can unmute your mic. After unmuting, Paul?
Yeah, you have to unmute him. But I was just saying there are 4 trading sessions. It's the basic. As soon as you enter, the first 2 videos in IM tells you that. There are 4 trading sessions. And the best time for trading is really when these sessions overlap. That's the best time for trading.
Right. Yeah. Good night, everyone. I wasn't referring to the trading sessions, but more so to the trading time frame. So you have the 1 minute, the 5 minutes, the 15 minutes, and so on. Yeah.
Right.
So I was asking which one is the best, because I know you have like day trading, and then you have swing trading and this kind of thing. And so based on your experience, which one you think is the best time frame to trade?
So I'll let Kendall answer that, but I'll give you my experience before I let Kendall answer that. So in all my times of trading, I know there are different time frames here, but I always thought here is what, even if at all the time frames, the rates are the same. So for a lot of time, a lot of years, I traded only on the 1 minute because you look at it here and you enter the 1 minute. So you would make a win in a trade, you lose. You win one, you lose, and you do that here. But how is it? Because I'm seeing trend, not realizing here's what you're seeing in the 1 minute is no trend at all. So the 1 minute time frame here doesn't give you what the trend is. But the other time frames, I'm going to leave Kendall to answer that. So I lost a lot because I didn't understand really the concept of time frame and trading. I leave the rest to Kendall.
Yeah, just to answer your question here, that's a very good question you're asking. Very, very good question. Now, remember I said before, whenever you're trading, you want to trade in the direction of the trend. So for instance, if this here is a downtrend, you don't want to enter the market around this point and buy because you're going to be in trouble, right? For instance, this is just a pullback, right? This is just a small pullback, a pullback here. And pullback doesn't really go far. Not all the time it goes far. Now, we look at this, we start at the larger time frame to see the direction of the trend. We start on the larger time frame to see the direction of the trend. So for instance, this time frame here is a daily time frame, right? And the daily time frame this year is a downtrend, all right? So because this is a downtrend, and let me see, this 2 candle here is in blue, you do not want to enter a buy, right? You do not want to enter a buy on this candle here because you see 2 candles going up, right? If you do that, then what's going to happen? You see, then you go back in a downtrend and then you're in problems. However, what also comes in play is what kind of trader you are. And a lot of people don't know, especially those who are now starting, it's kind of difficult to determine what kind of trader you are, all right? You're going to discover that over a period of time. Now, when I say that, meaning there are traders that named scalpers. Scalpers are traders who want the profit immediately, right? They want the profit within a few minutes or within a few hours. They jump in and they jump out, they get their profit. There are intraday traders, as you rightly said. Intraday traders they want to see the profit at the end of the day, right? They put in the trade, they don't worry about it, but at the end of the day, they want to see the profits. And you have swing traders. Swing traders are traders they put in a trade and they last for days, 2 days, 3 days. Some of them a whole week, 2 weeks, 3 weeks, sometimes months. They leave the trade running, right? And they're comfortable with that. So over a period of time, you will understand where at what point you feel comfortable taking your profits, all right? And that now determines what kind of trader you are. Now, with a swing trader will look at the market all the way to the 1 month, right? Swing trader is going to look at the market all the way to the 1 month and the 1 week, and they will actually place a trade in the 1 day, right? Or they might look at the market in the 1 week and 1 month and place a trade on the 1 hour, right? And place a trade and go down in the 1 hour to actually enter the trade. Now, a scalper will be different. A scalper now going to look at the trade at a 1 hour as the highest time frame and go down to the 5 minutes or 1 minute and jump in the trade and get quick profits, right? Now for now. Now, an intraday trader going to look at the market on a from a 1 week to a 1 day and even a 4 hour time frame to get the direction of the trend and jump down into the 15 minutes to get an entry point. And by the end of the day, he wants to see his profits, right? You don't mind staying 1 or 2 days to get the profits, but at the end of the day, he or she feels comfortable getting the profits at the end of the day. And again, that will develop over a period of time. When you stay on the market, then you're going to realize what kind of trader you are. So it depends on what kind of trader you are. That will depend on what time frame you look at the market on, right? And the higher time frame you look at it on, as I said, you always want to trade according to the direction of the trend. So you look at the higher time frame to see the direction of the trend, and you'll get down to the lower time frame now to know when to get into the market, right? In addition, well, let me, right? Did I answer your question, Jason?
Yeah, it did. Thanks.
Right. So for example, let me just pull this up right here. Now this is, just introduce this real quick. This is high frequency or digital trading. And this happened very fast, very, very fast, right? So you see a candle is change every 5 seconds. And we could do it in a way that candle change even in 1 second. 5 seconds is the lowest, Paul?
Yeah, 5 seconds, yeah.
Right, 5 seconds. So this is very, very fast, very, very fast. Now, someone who doesn't have an idea of what's going on, they might jump in this and they have no idea what's going on and say, hey, this is going too fast for me. And within a minute, 2 minutes, you could make profit or you can lose as well, right? And every 5 seconds, the candle change, all right? And this here is also a platform that the IM also offers, and it's very interesting.
Yeah, don't talk much about it to these young traders. Take it out on the screen.
Yeah.
There's a link that's posted there from Candice to verify what kind of trader or trading style is best for you. You can copy that link and you can check that You can check that link to determine what kind of trader you are too.
Yeah, thank you, Candice.
And it has to do with your lifestyle too, right? Because if like you have a full-time job
Exactly.
and you're trading part-time, then you have to base it off, well, your daily activities as well, right?
Well, yes, but we're hoping that this isn't done for long, because when you develop, I mean, you should really and truly, after going through the academy, and by the time you spend a good 6 months on this thing and you perfect that here, you should be going to work if you really love what you're doing. And maybe you could go to work and don't even take a salary from the work. But at the end of the day, what you're earning from here when you master that should really take care of you. So
Yeah.
for now, you learn your style to get it incorporated into your lifestyle. But by the time you master this thing in 6 months' time, getting to go here, you shouldn't worry about lifestyle. Lifestyle should just be on Forex, trading.
Yeah. Since that you're talking about lifestyle, Jason, if you're busy and you don't have time much to analyze the charts, I would recommend Swipe Trade. What Swipe Trade does, Swipe Trade is an app on IM. You subscribe to it, and it will you have an app, and it will literally send you trade alerts. So all you do, you just get your phone, pull to the side of the road, get your phone, you copy from the Swipe Trade and paste it in your MT4. Copy and paste, and they have a very high rate of success. Right, that's Swipe Trade. So you can look at that, and something you can get into. That's where I started, because what I was doing was very, very busy. And as I said, it helped me together with the harmonic scanner to grow my account, you know, when I just started.
All right, nice, thanks.
No problem.
All right, Kendall. So I must say, I mean, we've been at it for a while. We started at 8 o'clock and it's now 9:48. It's quite a while. And it's a lot of information. I mean, when it comes to that, persons can go on and on and on because they realize what it is. But the aim of this is not just to give you information, but give you information in a manner in which you can internalize it and you can really apply it. It's quite a lot. And we know we have a lot of new persons on the call here. So this is something we can do and we are going to do periodically. I mean, we can do it at least maybe twice a week based on person's schedule. We're going to do that here. And again, I said, the call is recorded. So I'm going to post the link after the end. Once it is edited and uploaded, the link is also going to be posted. But I think it's quite a lot for tonight. Here, I really appreciate persons coming on the call. And as I say again, we all find, or we have all found one common goal, and this is what is unifying us because we all want to get there. And the thing about it, we're not taking from anyone when we take from the market, but we're taking what is rightfully ours. For all the years the bank has been riding us, it is now time for us to get on top of it and start riding and taking what is duly ours. And we can do that. So from my end, I say thank you for getting on the call, and I really do appreciate the comments that were made. Some persons didn't have any question, or some persons might be a little bit timid, but you can also ask your questions in future thing here. You can write your questions and you can post your questions. So I'm just going to turn you over to Kendall so that he can make some closing remarks. And if anybody has anything pressing to say, we can give you 10 seconds to do that.
All right, real quick, I said I didn't really want to confuse anyone. If anyone is confused, that wasn't the intention, all right? Because we try our best to make sure we hold your hands and move forward. I try to do a call with my people at least once a day. I will try and up it to see if we get it done twice a day, and try to show you exactly what needs to be done and go through the process. My motto is no one left behind. As long as you're on this platform, I believe this platform will set people free, right? I've proven it, and I believe it will work. Well, I'm seeing it working actually, and I believe everyone will be successful on this platform. I will always say the only person that will not be successful on this platform if they do not apply themselves to the information. If you're paid for this, make use of it. Go in your back office, look at the videos, look at the live sessions, look at the educators, take advantage of the harmonic scanner, take advantage of what you're paid for. As you do that, you educate yourself, and you will get to the point where you're actually able to analyze the trades for yourself and take full advantage of this platform. All right. And I strongly believe that this will set everyone free. My intention, Paul, is to make sure I get this platform in every home in Grenada, every single home. Right? So I'm really, really want to do that, right? So thank you so much for having me on the call. I appreciate for those who actually joined us on this call. Thank you for coming and thank you for sharing.
Make me back host, please, so I can finish up and get this thing sorted out. All right, so thank you once again. And anyone, you're free, you can unmute your mic if there's anybody who has anything pressing to say. We can give you 10 seconds to do that. And you can do that before we end this call. All right, if not, I must say a pleasant good night to everyone.
You're saying something, Paul.
Okay.
Yeah, being here. Is it I think is it Mr. Paul? Mr. Paul?
Yeah.
Correct?
Yeah.
Yeah, most second, Mr. Paul, I really highly appreciate what you all are doing in terms of the help, the motivation, the encouragement, and everything. And I know that many of us here, if we are just signed up and just trying to get things organized on our own, then it will be a lot more difficult to us. And I'm sure that you might have people who not take advantage of this investment. But being that these positive words and everything that you showed us and stuff, I know that people will be a lot more encouraged. And I'd like to thank you all for the time and stuff. I really highly appreciate that.
You're welcome.
All right, thanks, man. Yeah. All right, guys. So we're gonna announce again on the other call. I think, Kendall, what we need to do, we need to break the call up in the sense that we can do a beginner to intermediate and then do the advanced.
Yeah.
Yeah. But persons again have to spend time in the academy. That's what you're paying for. You're paying for tuition. Your tuition is for access to the academy, and you have
what I've been doing. Sorry to cut you. What I've been doing with my people, Paul, I'm actually showing them what to do first, what to do second, what to do third in the back office, in the IM center, where to go, where to get the harmonic scanner, how to read the harmonic scanner, and how to place a trade on the harmonic scanner. In the process, the majority of the people have their demo account. Some in the process of getting live verified, and some already did. So I'm in the process of doing that, one step at a time, making sure that everyone, within 2 weeks, I think by next week, please God, the majority of the people should be able to maneuver the back office and assist others when they're coming in.
Okay.
So we can have, when we have the call, we can have a session where you can explain, run through it. Sometimes it might be repeated information because of people who already know, but people who know coming in, just run through it really fast. And by repeating the information, it will get a lot easier. And then we could get in some trades and so.
Okay.
So we'll talk, and we're going to make an arrangement.
Yeah. Not a problem. Yeah. Sure. All right. So pleasant good night, everyone, and get some rest. And remember, when you listen to news as a trader. And news as a trader is different from news as a regular listener. All right. Have a good night, everyone.
Good night.
All right. Good night.
All right.